Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and gals. So let's take a look again on the weekly, on the gold market in general, starting from the weekly chart, and we involve today another time frame, just because on the daily chart, as you can see, overall situation barely has changed, and as it happens relatively often in recent few months, the fundamental background, fundamental analysis for the gold is looking more interesting rather than technical situation, especially when the market spends a lot of time, almost the whole week, in a very tight range. So that's why on the technical side, just a few things that we could add to our previous view that we have discussed on Friday. So in general, a few words on the fundamental background, sentiment background. The recent events, statistics release, gold response to the Fed minutes release tells us that everything stands according to our long-term view. So we do not see any reasons to change our trading plan, our analysis for the gold, and we still think that the gold stands in some some final stage of the bullish market. So it could fluctuate around these current levels for a few months, but that will be the final point, the end of the bullish trend. And in the perspective of the few months, we expect a downside reversal on the gold. That's what about the long-term perspective, because if you have seen the FOMC minutes release, you could see that so already stands some argue among the FOMC members. And two of the members tell that the tapering could be needed earlier. It means that despite that, Fed is trying to look like, well, absolutely confident and calm on the statement. Inside the Fed, inside the Committee on Open Markets, there are still some arguing around inflation. And it means that Fed treats the inflation risk as a serious. That supports our view that sooner rather than later there should be bullish reversal on the dollar as the inflation is rising, and correspondingly bearish reversal on the gold. Additionally, we have very strong statistics. The recent PMI report also has shown the good numbers, so within a couple of weeks we will get non-farm payrolls release. Next week we will get the PCE index, so it's really could be important, and that just confirms our long-term view. In the shorter term, since Fed looks confident, the CPI report hasn't changed the sentiment market significantly based on recent commitment of traders report. We think that gold has chance to proceed higher, so it could move higher. We are not sure that will be definitely back to the top of the 2075. And we prefer to move step by step from the one target to another. For instance, last week we discussed 1850 target. It has been reached and broken. Market even has reached the 1875 ABCD on the daily chart. And now, based on the weekly chart, we have the reasons to talk about the next destination point, which is 1923, 1925. That will be, as you can see, weekly overbought. It stands right here, 1927 approximately. Monthly pivot resistance one here, and major 618 weekly level. So that will be relatively strong resistance, and we think that it could hold price for considerable time. At the same time, currently market stands in a range where no barriers, because the major levels already has been broken, as you can see. Market is not at overbought currently, so it's relatively free space right to the target. That's why on the common week we're mostly, we think the chances on upward continuation looks good, especially with the supportive fundamental background and overall sentiment on the market that stands positive. On the daily chart, it's difficult to add something. Mostly here we could repeat only the same thing. First of all, market has formed a high wave, and the direction will depend on the direction of the breakout of this range. So upward breakout means upward continuation, downward breakout means downward continuation. But the downward continuation, it will not be some reversal or something of that sort. This will be just a deeper retracement, which in current environment is also normal thing, because market stands at the OP, major daily OP, and Fib level. Fib level is also from the important top. So you can see this is valuable C point top. It's important level. And slightly deeper retracement, it's nothing wrong with that, so it's normal. But currently, the tricky moment stands so that actually we can't tell it definitely right now whether this deeper retracement happens or not. Just because we have very volatile price action and we don't have some clear signs and patterns that definitely should happen. In the current circumstances, personally, I feel confident and comfortable to be a sideways watcher over a situation and see what will happen. Because based on a daily chart, I can't call you to take the short position because we have the bullish context. And from that standpoint, we should just sit on the hands and wait. If market will show the deeper retracement, that will be great to us because we will be able to buy gold at the better price. In fact, gold currently stands in the buy on the deep mode rather than to sell. So from that standpoint, I do not see any reasons to go short. Additionally, the one thing that we could consider if you don't want to like or prefer to act more active trading, you could consider taking the stop buy order. So you could place a sleeping stop buy order slightly above the market, and if breakout suddenly will happen, you will step in on the moment of the breakout, if no retracement will happen. Speaking on the bearish position, well, theoretically, you have reasons to do that because you have the market at the agreement resistance. And the pullback could happen. But as I said, personally, in the current environment with this bullish sentiment, I'm feeling comfortable to take any short position. Although it's not forbidden, so you could decide it by yourself. On the intraday charts, take a look that indeed on Friday we've got the spike that we discussed, but it was not enough to break the previous top. And if you will see, as I will show you a bit later on the hourly chart, the price action here mostly looks bearish. What does it mean? It means that I would treat the spike not as some bullish sign, but as a failed attempt to break the top and proceed higher. So market currently has some lack of the driving factors just to keep going higher. It needs to take the breath. And with this price behavior, I would suggest that we could get some more fluctuation in this range, more fluctuation inside of the high wave pattern on the daily chart. I wouldn't be surprised, and in the beginning of the week we could see slightly deep downside action. For instance, take a look on the hourly chart. That's what I'm talking about. You can see we have the reversal type of the action. This candle is reversal type. We have the bearish engulfing, and it looks like some kind of the rejection of the current price, which means for me more like a failure attempt to break rather than, well, I don't know, some bullish moment. And from that standpoint, I'm not excluding the chance that gold could return back to the 1860 area. Some kind of the ABCD pattern might be formed before another challenge will happen. So it means that we still could see the fluctuation inside the high wave pattern range here for some longer time. Well, and as I said, mostly everything will depend on the breakout out of this range. So upper breakout means direct upward continuation to the 1925. So in the current circumstances, well, we just need to keep an eye on the patterns and the price behavior. Appearing of any bullish patterns here, we will try to take the long position. Somewhere closer to the bottom of this range, for instance, around 1850, 1860. If you have the bearish view, you could use this bearish pattern trying to take the short position with the stops above the top. For scalp trading, this is acceptable. You could try to catch this ABCD pattern right to the 1860. But this is, guys, only some small, very small trading and short-term trading stops, more scalp trading stops. Well, I'm just mentioning it, but for our scale, since we're mostly dealing with the cold on the daily and fall time chart, they are too small. So mostly I prefer currently to sit on the hands and see what will happen inside of this range and just keep an eye on the possible bullish patterns if they will be formed.